Hey everyone, Bill Lethman here for Money Evolution. In today's video, I'm going to be talking about some of the biggest investing mistakes that I see happening all the time. Hopefully you're not making any of these, but after watching today's videos, at least I think you'll have a couple of ideas of some things to watch out for. So mistake number one is saying I haven't lost until I sell. Now, this is something that I see all the time, but if you own a stock and let's say that stock hasn't worked out exactly the way that you intended, one of the things I hear people saying all the time, well, I haven't lost until I sell. I bought the stock at 60, now the stock is at 40 or whatever it is, and they figure that, hey, until I capitalize that profit, I haven't sold. The way I would look at this is say, hey, where can I allocate my money at this given time? And if I had $10,000 or $5,000 or whatever it is that you put into that stock or whatever that stock is worth, would I come in and buy that stock today at $40 per share? And then if the answer is no, then you shouldn't be holding on to that. But I think a lot of times we get wrapped up a little bit into ego. We do that as individual investors, but I see professional portfolio managers making this mistake all the time as well, where they want to be right. And so if I haven't sold the stock and taken that loss, well, I'm not wrong until I do. So I think that's a big mistake that we want to watch out for. My opinion on stocks is we want to buy stocks that are trending in an upward direction, and so a lot of times I think we get wrapped up into this and we want to look for stocks that are trading really cheap, and that's another mistake that we see, and that's bottom fishing, so looking for stocks that are down in value. We saw this recently with some very big names. General Electric is a name that really has fallen from grace and is trading for a fraction of what it was a couple of years ago, and a lot of people have bought the stock, recommended the stock, and they probably, most of them have really kind of gotten burned on that because they remember the stock as being something that was worth a whole lot more money. Now that it's a lot cheaper, they figure, well, hey, I'm just getting a good value. But those stocks generally that are trading down like that are trading down for a reason. So mistake number two is bottom fishing, and then along the same lines of that is the double down. And so we'll see people do this a lot. And it's the same kind of mentality. That stock that they owned is down in value. So they went into the stock at a cost basis of $60. The stock's trading for $40. So they double the amount of shares that they own, and that gives them a cost basis of $50. And again, the mentality there is, well, now I only have to go from 40 back up to 50 for me to break even. And they think they're doing something good. But again, why is that stock trading down like that? And that's the big mistake that I think people are making, and not cutting their losses early. We oftentimes refer to investing like planting a garden. So if you think about your garden, if you have one, you plant a bunch of seeds, and hopefully those seeds come up as flowers or the vegetables that you want, but you're definitely going to get some weeds in there. So the smart thing to do is to pluck those weeds out as quickly as you can. In other words, cut your losses and let those flowers, let those vegetables grow as long as possible. So as long as they're on that upward trajectory, we don't want to rip those out by the root. That's another mistake that we see people having, and that's, hey, I'm going to take my profit and I'm going to lock that in. And it's very difficult, even for professional money managers, to find good companies to buy. And if you have a stock that's already trending in an upward direction, why would you want to take that profit and go try to find another stock that you may not necessarily hit the same kind of success with? So again, thinking of it like a garden, let those flowers and vegetables grow as long as possible. That's the way you want to look at investing. Another one, and I'm going to clear my whiteboard here, give me some clear space here, is speculating on news. And unless you have some kind of insider information, which is completely illegal, there's no news that about a company that everybody else doesn't also have the same news on. So if you're thinking about a company that may be coming out with a new product, let's say a pharmaceutical company that's going to, going through drug trials on getting a drug approved, and you're very optimistic that that drug is going to get approved by the FDA, you might think, hey, if that does happen, that stock's going to go up in value. But the other part of that is true as well. If that doesn't get approved, the stock is going to go down in value. So, let's use an example here. Let's say you got a $50 stock, and let's say there's some news that comes out. Somebody's, got this breakthrough product that's coming out, and the stock will probably trade up a little bit based off of that news if the overall market is excited about that. So it might go up to $55 or $60 per share. And maybe doing some calculations, you think, hey, if that drug gets approved or that product gets approved, maybe the stock will be worth $70 per share. But the other thing you need to think about too is if that stock went up to $60 per share because of the idea that that product was going to come out or that news was going to happen, remember, it's probably going to go back down to $50 per share if that news doesn't happen. So again, unless you've got some kind of a magic crystal ball where you know the outcome of these news events, I just think that investing based off of any forecast of news is going to be very difficult to do there. Another one, and I've seen a lot of people here talking about this recently, and there's a lot of YouTubers talking about dividend investing, but if you think of buying an investment purely for the yield, that's another mistake in my book. Dividends are very nice, and especially for people that are getting closer to retirement, that want that fixed income. Yield is something that certainly can be very beneficial, but you still want to evaluate the overall business. What is the profit of that business? What is the growth of that business? And not get too hung up on just what the yield is. A lot of times, if you have a stock or a company that's yielding a lot, oftentimes that means that the price of that stock has actually gone down. So if you've got a company that's yielding 4% today, that could be because the market right now, that's a $20 stock, and maybe back when it was at a $40 stock, that was only a 2% yield. So it went up to that yield because the price of the stock went down. Again, that goes back to mistake number one, and that's fishing for companies that are on a downward trajectory. So we want to avoid buying stocks purely for the yield. The last one I want to talk about is chasing returns. And this is one that we find all the time. And that's basically, especially if we're looking at a mutual fund investment, we see a fund that is really, let's say, hit some out of the ballpark kind of numbers and chasing after that. And oftentimes, that manager may have had a couple of really big winners in their portfolio that they did very well on. And, that manager is not necessarily going to hit those same kind of numbers coming up. So by chasing after that return, you are always going after what has done well instead of taking a step back and trying to identify what is going to do well. And one more, I said that was the last one, but one more that I want to throw in here is panic. And that's probably the one biggest mistake that I see people making all the time. And what I mean by that is, you have an investment and all of a sudden something happens with the overall market and the economy starts to slow, the stock market starts to come down, and your long-term game plan for investing completely gets thrown out the window, and you panic and you sell everything. And so, being able to kind of, I don't want to say time the market, but being able to make some tactical moves, that's something that we do oftentimes with our portfolio, but you want to do those in some type of a fashion where why you're making those moves, when you're going to make those moves, but when you go into kind of the eye of the storm and you completely panic and you sell out things, usually that's going to be at the wrong time. And even if you're in a position where you say, hey, I'm going to sell out of everything, I think the economy is going down, the market's going down, remember, that's only one of your decisions that you have to make, is when do you get out, but when do you get back in? And that oftentimes is the most difficult decision to make. And we saw a lot of people in that position coming out of the financial meltdown from 2008. So even some of those people that tactically made some moves and went into something a little bit more conservative, talking to those people in 2009 that was pretty close to the bottom of the market, a lot of those people, or very few of those people I should say, really had the wherewithal to get back in, even though that was, in historical hindsight, a very good opportunity to buy in low, but that was not the narrative that was on the news. So anyway, when do you get out? When do you get back in? Panic is something that could be a very, very big mistake. So anyway, real quick video here. I hope you got some great information out of this. Remember, check out some of the links below. We've got our resource center that has some additional videos, some things that are not available here on our YouTube channel. So go ahead and check that out. It's also going to give you access to our live events when we do those. That's something that's only available through that resource center. And remember, hit that subscribe button, like the video, share the video with your friends. We're trying to get the financial education out there to as many people as possible, and and hopefully this has been beneficial for you. So with that, have a great day, and I'll see you back in our next video. Thanks.